Good afternoon, and welcome to Barchart's weekly series of webinars designed to help you, the investor or trader, to better understand a variety of trading concepts, as well as the pages and tools that we provide to Barchart to help support you in making a more informed investment decision. Today's subject: global markets and opportunities for portfolio diversifications. Today's modern investor understands the importance of portfolio diversification through a multiple of asset classes, for instance, stocks or bonds, ETFs, options, and futures. But also inside of each one of these classes, for instance, in equities, sectors and industries diversification. But also we can think about globally or geographically. And the purpose for this diversification globally is to lessen our exposure to risk to any singular component of capital markets. In this case, what we're going to be investigating is limiting our exposure to just U.S. equities markets. Well, hello, my name is John Rowland, and today, hopefully, what I'm going to do for you guys is show you how easily you can do global diversification can be. And plus, I want to give you some cool ideas about how to discover opportunities in those global markets. Today with me, as always, is my partner and our moderator, Jean Baker. Hello, Jean.
Well, hi, John, and hi, everybody out there.
So let me ask you this, Jean.
Okay.
Do you like to travel?
Oh, I love to travel. That's the thing I think I'm missing. It's a close tie with that and going out to restaurants, but yes, I love to travel.
The missing out on traveling because of COVID.
Oh,
Well,
yeah.
Jean, I promise you today that we're going to circle the globe together, and also we're going to travel all over the Barchart website. So,
Oh, wonderful.
so break out your passport
Okay.
and buckle up. Get ready, okay?
Okay, will do.
All right, so before we get started, right, like the stewardess in the airplane, before we take off, I just want to remind everybody that today's session is for educational purpose only, and that all investments and trading have risk, and it's important that individuals look at risk in terms of their own financial situations, and that we suggest that you consult a qualified financial professional before making any investment decisions. And that today's examples or things that I'm going to show you should not be construed as an endorsement to buy or sell any particular asset or security. Okay. All right, so it's not hard to hear or see in today's headlines just how interconnected our markets are, how connected we are to global markets, and how we become in our economies. Even Barchart selects companies who conduct business outside of the U.S. and compete on this global stage. So, for instance, here we have Barchart's chart of the day, Vendente, and this is an Indian natural resource company who has ties not only in a wide range of products, natural gas, electricity, natural resources, but also conducts business, as you can see down here, in Africa, in Ireland, Australia, Liberia, UAE, in all four corners of the world. So what I want to show you guys today is some techniques that we can use to do some analysis or look for opportunities around the world. So where are we going to start? Well, we'll come back to our stock page under the World Markets World Overview, and at least this is where we can get a kind of picture of what's happening around the world. So the two techniques that I'm going to work with you guys today is, one, I'm going to do just your conventional top-down approach where we'll look at big picture and narrow down to individual candidates. But also I want to show you a cool way how we can start looking for opportunities, which I call cross-asset approach, where we're going to look at different types of assets to give us trading opportunities in certain markets. So here we see a snapshot of the global equities markets, right? And notice here that it is the world iShares for an ETF, and we do have a world overview market where we can look at world ETF or European, Latin America, Pacific, and so on. So what's important for us to do is, as we do with any of our lists that are in Barchart or any list that we can create on our own, is that we do have some default settings, right? Our view default settings, technical and performance, where we can do some of our analysis, either technical or how is this particular ETF done over the last month or 3 months or over the year. The nice thing about the main view is, and we're going to go a little bit deeper into this as we go through our thing, is you will always find our Barchart Opinion, which is talks about strength and direction of trends, and also technical indicators that Barchart uses. But this top-down approach, we've done a video before, and I think it was from October 14th, one sector analysis, where we talk about this top-down approach. So if you want to get a little bit more details about some of the different components or things that we want to look at when we do this top-down analysis, I would recommend that you watch that video. All right, so we see a snapshot of global equities markets that basically track the indexes of those particular markets. So what we're going to do is we can click on any one of these, right? And for instance, I'm just going to click in this European one. And this is going to take me to the price overview page, right? So which will set me on my first steps of doing my due diligence of what I want to look for in terms of how the fund is made up, what is it's doing its performance-wise, basic statistics here, how much volume it's trading, what is its range, we have our chart, getting a little snapshot picture, some stuff about the fund itself, right? What fund family it is, or what are the management fees, and if it has paying a dividend, right? And over here you can see where it says the fund summary will tell us basically, what is the purpose of this fund. In this case, this one tracks the European market through an indexing, right? So it's also important for us to take that moment in our due diligence to look at what holdings that the fund has, to make sure that they represent those equities or that market region that I want to invest in as I do this global analysis. And here you can see this one is this Euro 350. As you can see a lot right from the top here, that all these companies are European companies. And that's important for us to understand, because I might not find the things that I want. For instance, if I go back to my world shares ETF, right, and I do my market analysis in terms of its holdings, you can see that its top 10 holdings are Apple, Microsoft, Amazon, Facebook. These are all U.S. equities, right, who do business around the world. So that might not be the exposure or what I'm looking for in terms of diversification. So that's a real important process in terms of our due diligence, all right? Okay, so let's go back to world markets, right? Now, one more. Notice that not only do we have world markets, but we also have Europe, Americas, and Asia Pacific. I do want to point out that under the Asia Pacific, you will find South Africa. So we don't have an Africa per se, but South Africa would be fall under the Asia Pacific. So here we have the European, right? And notice now we now have broken down the region of Europe by country, right? Belgium, Denmark, Finland, France, Germany, Ireland, and so on, right? So we could click on any one of these country symbols, and that'll take us to that specific country. Now notice that we're not confined to just this one ETF. You will also be given some other options in terms of ETFs that are ranked by assets under management. And so you can see there's a couple different Russian ones that are available for you. Again, notice that we do have our Barchart Opinion, right? And so this is, this is like our mother-in-law, right? Every time you look at anything, your mother-in-law has an opinion, right? So Barchart always has an opinion about ETF stocks or anything. So you can always find this. You can rely on it, right? But look at our ETF, right? What is it? Is it a long? Is it a triple long? Is it a short? And right? In this case, we just see long ones, right? But notice also that once I get past the ETFs, I also have an opportunity to look at a variety of stocks or equities, right? And again, Barchart Opinion, but here now we're going to start seeing the industries, right? So now I can start top down and say, hey, I'm going to look at Europe, I'm looking at Russia, and then maybe I'm going to look at a very particular aspect of the Russian economy, for instance, banks or oils or mining. Per se, that's where I want to invest if I was going to go into an individual stock. Now, be aware that a lot of times the stocks that we might show you, you might not have access to, or if you go into an ETF, you personally, your broker or where you keep your trading at, that broker might not have access to world markets. So it's important for you to understand that aspect of it. Now, one of the things that you can rely on is if you see ADRs, which the definition here, you can see I got from Investopia, is that basically what these large Wall Street type banks do is they'll purchase these shares in these foreign countries or foreign exchanges, and then they will offer an opportunity for U.S. investors through these American depository receipts. Think of it like this. It's literally a one stock ETF, right? They're going to handle all the logistics of the dividends and the taxes and all that, and all you're doing is investing in the stock through this ADR. So if you see the ADR, that will give you confidence that you most likely will be able to invest in that stock if that's what you want to do. So I can go into an individual stock and look to make sure that this is, do my due diligence. Is this a stock that I'm interested in trading? What are the aspects of it? I can even go down into the profile and really dig down into it. And so, for instance, this one here, this is an energy company that provides gas to the Russian Federation, right? And it's through its explorations and production, so on and so on. And you can see that it's headquartered in Moscow. So that's what you would want to trade in. Well, here would be that opportunity. Now, also remember, again, talking about our Barchart Opinion, right? You can come in here and look at, see what technical analysis that we're performing for you, and what our opinion is and what our strength and direction. And again, if you're interested in about the details about how to use this part of our website, we did a strength and direction Barchart Opinion webinar back in February of February 17th. So I would recommend that you would go and check that out. Okay, so let's go back to our European markets. Hang on. And let me get back here. Now, again, we went inside of our region. We looked at Russia, but also notice that if we go a little bit farther down, we also do see that we do have some stocks, and these again are ranked by market cap. These are our larger market cap stocks, and you recognize a lot of these names: Nestle, Novartis, and SAP, for instance. So there's a lot of different information here. And again, look, notice that it does tell you which country that those stocks are located in, or where their headquarters are, right? But again, understanding the country of origin and the industries that they represent. But notice down below here now is we have our European Forex rates, right? So why do we give you this, right? Well, here's where we're going to start looking for those opportunities and trends in our markets. So in one of our webinars that we did recently, we did one on Forex, which was back in February of 10 of this year. We talked about this flow of capital, right, into different currencies, and that sometimes capital chases what we call the interest rate differential, sometimes referred to as the carry, but also as companies, individuals, and nation economies purchase the goods and services of this particular country or any particular country's nation's currency. We'll see that in the relationship of those currencies. So what we're going to do here is we're going to go to currencies, and I'm going to go under the long-term trends. Now, we've talked about this before in this previous webinar in the Forex, that we're going to look at longer-term trends for currency appreciations between these two competing currencies. Now, why are we doing this? Well, think about it. Is a purchasing manager or the logistics of a shipping company, do they care what happens in the next 15 minutes? Do they care what happens in the next 60 minutes, right? Or even day to day? No, we want to look for these macro trends, right? These longer, bigger trends, right? We want to see, you think about economies, right? They tend to, it takes months for them to really get it going, or that this flow of goods and services could go on for months or for years. So we're not going to worry about timing in terms of this analysis or this diversification. We're going to rely more on these longer term trends. Now let's look at the two that are at the top of our list. We have the Australian dollar versus the Japanese yen, and the Australian dollar versus the United States dollar, right? And think about it, Japanese yen and US dollar, those currencies represent two of the largest economies in the world. And, Australia is a very small country. I'm sure that our economies dwarf their economies. But yet, the way this is quoted, here's our base currency, here's our quote currency. And so this graph is showing us how has the base currency done against the quote currency. And you can see on a weighted alpha that, the US dollar or the Australian dollar has gotten about 25 to 22% against these two currencies. So it's telling us that the Australian dollar is appreciating against these two currencies, which could be a clue that monies is flowing into Australia. So now we've got kind of an idea. We're saying, all right, well, we're starting to see money flow into Australia. So let's go right to Australia, right? We're going to go right to Australia currencies and see if we can see other trends. Now, on my main view page, well, let's look at performance of the Australian dollar. And here I can look at the Australian dollar versus all currencies or active currencies in the world. And notice what we see here, right? I mean, this is pretty obvious, isn't it? Every currency in the world right now, compared to the Australian dollar, the Australian dollar has appreciated against all these currencies. So what is this telling us? It's telling us that monies are flowing into Australia from around the world. And so that will give us some trading ideas and opportunities as the world buys Australian goods and services and those equities that are represented by them. So now we'll go back to our world markets, but now we're not going to be in Europe. We're going to go into Asia Pacific because we're looking at Australia. And notice again, here we are in our regions. So we'll pick on Australia. Give me a second here to load up. All right, and so now we're in Australia. And again, here's our Australian ETF. And again, we have other ETFs that we could look at, right? And there's our Barchart Opinion and what the trend has been doing, how many assets under management, right? But again, if I wanted to drill down a little bit more, right, I could go into individual stocks, right? Some of these larger cap stocks that are represented by Australia, right? Looking for those trading opportunities. And again, look at the performance of them over, let's say, the last 3 months or the last year. And the one that kind of jumps right out at me is this metals company that is in the iron business. Now, I'm thinking about major trends or macro trends. One of the ones that we've noticed over the last 6 months is that commodities have come back, and certainly basic metals, and some of you might have even been trading gold or silver, have noticed copper. All of these metals have done really well, and I do see that here this particular equity has performed really well over the last year. So this could be an opportunity for us to look at that market. Now, this is the iron market, right? And so I don't know much about the iron market, but I do know iron is used to make steel. So I'm going to jump away from this part of our website for just a second and just show you this correlation that I want you to start thinking about. Is I'm going to go to our futures page, and here I'm under the European metal prices, right? And steel rebar. Now, this is not a contract that you and I are going to trade, but steel is, iron is used to make steel. And let's just go right to the chart. And we can see that, steel prices have really accelerated over the last 6 months to the year. So what we can do now is, here's our steel chart, and we can compare it now to our stock, the one that we were just looking at. And bingo, look at that. So what we're seeing here is the reason why that stock has performed really well is because monies is flowing in Australia to buy iron ore so that they can turn it into steel. Now, notice that in the recent weeks, the steel prices have fallen, and so has the stock that we were going to could look at trading, right? And so here's that stock today, right? So what I might do here is go a little bit deeper into the stock and look for trading opportunities. Now, one of the things that I like to do is I go into trading strategies inside of a stock, and I really like, for equities and for Forex, I do like the 2100-day indicator, and we can see that the 2100 indicator back in April 30th gave us a buy signal. And I'll just show you that chart real quickly. And you can see that the 20-day moving average turned here right around the beginning of April, but when it crossed the 100, that was when the buy signal was created. But so you can see that it took, from the beginning of April to the end of the April for the indicator to become a buy signal. So this is where I kind of want to, reinforce what I was just saying to you, is that in terms of timing, in terms of minutes or hours, or even as a day, this correlation that we're going to start to look at, we're going to let this happen. We're going to let this play out over weeks or months. And so we do see that the stock was starting to go up in the beginning of April before that signal was given to us. Now, we're still into this trade. This signal is still is a buy signal, but you can see that during October to December, they kind of flattened out, and this stock was trading a little bit sideways. But I do want to show you that about the beginning of December, the stock started to rise in value again. All right, so let's go back to our currencies. Let's see where I want to be. Okay. And remember, we were looking at European markets. So let's go to the Australian dollar versus the euro. And we'll go right to our chart. And I'm going to go to a yearly chart. And we can see that as far as the Australian dollar towards the euro, you do see that about, let me get this down here, about April is where we started to see the Australian dollar appreciate towards the euro, right? As monies from European money flows into Australia to buy Australian goods, right? And you can see that, the beginning of April, April 3rd, here it is. That's where we started to see that exchange rate start to go up. That's when that stock started to take off. Now, notice that, here is that sideways action we saw in the stock, and that about the beginning of December, right? About the beginning of December, again, that's where we started seeing that favorable cross rate for the Australian dollar. And that's about the same time, within about a week or so, of when we saw that equities market starting to appreciate. All right. So learning that we can look at currencies to help us find opportunities in our equities markets. All right. Okay, cool. All right, so let's go back to our currency markets for a second. Here we go. Let's go back here. And I want to show you, I'm going to go back to our popular cross pairs, cross rates. And one of the things that I want you guys to kind of watch for is, the dollar index. And what we can do in the dollar index is there's this aspect to the dollar as money flows in and out of the dollar, as it chases results around the world, that the strength or the weakness in dollar will relate to equity prices around the world. Now, this is a chart that I had created for our Forex webinar. And what I was showing in the Forex webinar was this was an inverted head and shoulders, and that we broke out of this neckline, and that if we could hold in here, now we did drip a little bit farther. I anticipated it to hold. But once we got above this neckline again, that there would be potential for this to get above here. And we kind of figured that there was looking for a target area of somewhere around 92.50, 92 and a quarter to 93, and we can see that's exactly what the dollar index did. So I'm just showing you what is going on in the current markets. Now, the reason why we've seen this rally in the dollar probably has to do more with rising interest rates in the United States, and as money is coming back into the dollar, because the 10-year note got above 1.5%. But again, what we could do is look at our exchange, this Australian dollar, and US dollar AUD. And see if there is some correlation that we can look at. And right, we see that the US dollar is still in this major downtrend. Now, we've seen the dollar appreciated in a short period of time, this kind of this corrective mode in this downtrend. Now, some folks would say, hey, we broke this trend line and maybe this is the beginning of a new upward trend. That could be. But in the theory of trend analysis, a downward trend is a cycle of lower lows and lower highs, and you can see that we haven't gotten, the dollar index has not gotten above, or the dollar has not gotten above this controlling swing high or pivot high from the last time the market moved down, and that is significant for us. That also could be a sign for us that we could go back into Australian dollar assets or equities and look for some buying opportunities as the dollar weakens versus the Australian dollar. Now, remember our Indian stock that we talked about? And again, this concept of falling dollar, rising world equity prices, rising commodity prices, rising dollar, falling world equity prices. So here is our stock, and you can see the price movement here. Now I'm going to just add our dollar index on top of it. And there's that correlation that we talked about, right? This falling US dollar, rising world equity prices. Again, I want to reiterate that, the timing, right? That sometimes the prices have to fall before the equities start to become cheap, or that the dollar has to rise before the equities fall, right? And we do see that, the dollar has strengthened, and yet this equity is kind of hanging in there. Now, that could mean that these equities are going to fall, but we are seeing that the dollar is retreating a little bit. Now, this is the dollar index, and the dollar index is made of components of some European currencies, the Canadian dollar and the Japanese yen. This is an Indian company, so why don't we look at a comparison not for the dollar index, but let's look at a comparison as currency of our nation, of our stock, right? Indian rupee. And we really kind of see this a lot better, this correlation, right? Falling dollar, rising Indian equity prices. And you do see that, since the dollar peaked against the rupee just recently, it has started to fall. And as it's falling, this Indian equity looks like it has started to at least trying to make some new highs, right? So here we're seeing that correlation between the US dollar versus the Indian rupee. Remember, so let me get my thought here for a second. Okay, so what I want to do now is this was how we looked at through currencies or through commodities to find trading opportunities. But let's go to world indexes, all right? This is another way we can do this cross asset class. Now, remember our ETFs are tracking those those indexes, right? And so we do have world indexes, and these are the major indexes for all the countries around the world, similar to like our S&P. Amsterdam, Austrian, Belgium, French, German, Norway, Swiss, Euro, all the way down the list, right? Shanghai, Chinese indexes, Hong Kong, right? Tokyo, right? Japan, right? So remember we talked about Australian dollar, right? So here is the Australian index. And we said that the Australian dollar, the US dollar currency, was coming into an area where we thought that the US dollar was going to turn. It was coming into an area where it was going to re-engage that downtrend, right? So that would have been buying opportunities for us, looking for Australian currency assets, in this case, this index. And you can see that, this was, in the last few days, looks like a nice little buying opportunity based on that relationship of the Australian dollar to the US dollar. The US dollar rose in value until it found resistance, or in the case of the Australian dollar, and that would have been a buying opportunity for us in Australian dollar assets. All right. So a wide variety of opportunities through currencies, through indexes, and through futures markets, if you think about that, right? That's pretty interesting how we can do these correlations. All right, so let me take you to this page, and this is a watch list that I created, which kind of puts all these components together, right? And so right at the top of my watch list here is our Dow Jones Global Index, that index that has U.S. equities that are traded around the world or do business around the world, our dollar index, and then below that is I have the index of an individual country or region. I have the futures contract that is traded based on that index. And then I have that currency relationship between that region of the world and our US dollar. And so here what we're going to do is we're going to start looking for those opportunities based on what we see in the indexes, what we're seeing in the currencies, and also what we're going to see in the futures markets, right? And check this out. You're going to like this. All right, so there's our world index. Here's our dollar, right? All right, so here's the stocks 50. These are European stocks, and you can see that it's been in a nice little meandering uptrend. And just in the last 2 days, we did get a little bit of a pop in this index. Now, if I go to the futures market, right? Again, timing-wise, right? We got a pop about 3 days ago, right? So the futures market was a little bit ahead of us, right? Well, what that could be telling us? It could be telling you that relationship between the dollar and the euro has changed, right? As monies go back into Europe. And sure enough, there we see here was an area of really good support for the euro dollar, right? And, right? Prices was coming down into that area of support in terms of the currency, which would have given us an opportunity to look for buying opportunities in some European equities, or in this case, European indexes. And this is only one of 2 days of this price movement in terms of the favor of the euro, right? So again, not a timing issue, right? 2 days, 3 days, 4 days, a week. We're just kind of looking for general regions of supply and demand, or support and resistance, or as we look for changes in our trends. So what are we seeing here? So we're seeing our futures market, our indexes are starting to move out. We see our currency is bouncing, right? It's come into an area of support, and now it's starting to move higher, so it's bouncing. So what we might want to do is go back to our indexes, right? Our European indexes. Let's go back there. Oops, sorry, I'm in the Australian one. right? And look for some opportunities either in the ETFs or in individual assets, right? So what I want to look for, I want to look for a bouncing action, or I want to look for a breakout of a range of an already dominant uptrend. And so the ones that I noticed that were bouncing, here's the Denmark, right? You can see a nice little bounce, very similar to what looks like our euro dollar, right? And we could go into the dollar Denmark currency to look for that opportunity. Here's Finland, same thing. This kind of little bouncing action, right? That bouncing action. But I really like to see trends that are already developing. I'm kind of like a momentum or trend trader myself. So here's the German one, right? It looks like it's about to break out, right? Here's the Italian one. Again, looks like it's breaking out. And then this one really looks exactly what we were looking at in that stocks index, right? And this is the Norwegian one. So this would have given us an opportunity to say, hey, you know, we're seeing this flow of money from the dollar into the euro. Is this an opportunity to look for European assets? Going to go to my ETFs, look at my indexes, see what are they doing, see how are they performing, see those trends that are being developed, and looking to find those correlations. So this is how we can do cross asset correlations to help us find trading opportunities. Okay. All right. So I know this is not a very complex subject matter like we've had in the past for like options or so, and you know I don't see a lot of technical questions here. So at this point, if there are any questions, if you guys want to shoot those out to me, I'll answer them. I do see a question here from Gerard who asks about technical opinion. How do you consider short term? So yeah. Gerald, you know, it depends on the trader, but in this analysis of global diversification, and when we're looking for these global trends or these macro trends, you know, I think we want to start thinking about, you know, dailies, weeklies, yearlies, or monthlies or yearlies as those trends. What technical indicators would I would look at? You know, I like that 20-day, 100-day moving average. You know, 20 days represents 1 month, 100 days represents about 5 months or 6 months. So we're looking at a 1 month to it's basically a half a year's worth of action. So Brian didn't think Norway used the euro. Well, again, that would be something we'd have to look at. But what we're seeing here across the board is that European equities, right, as we're seeing the dollar strengthen or weaken against the European equities as money is flowing into. I mean, we could go and look at the dollar. What is it? The krona, Norwegian krona, I believe it is. That'd be a great. Let's go back to. Norway. Yeah, krone, not krona. And so, Brian, I think what we're going to see here is probably similar price action as we saw in the euro. I don't know. Let's see. I hope, keep my fingers crossed. Yeah, I mean, it's kind of in a sideways motion, but, you know, in the last, you know, week or so, we're starting to see the krona is appreciating versus the dollar. And the trend, you know, looks very similar to the index that we looked at, right? I mean, it's almost right on top of it. Okay. So I have a question here: would it be best to correlate the dollar to the ruble, or better oil demands? Would you say? So I'm guessing what you're saying is, should I look at, in the case of this Indian stock, could I also look at those markets that this Indian stock trades or produces in their profile? Right. I think they not only are they in oil and gas, but they're also in copper, silver, and iron ore, aluminum. So yeah, I think you could, in this particular scenario, you could use both the currency and also the commodities to give you those trading opportunities. Lena asks, what appropriate allocation would you do for global diversification? Again, it would be up to each individual trader based on their own risk assessments. But, I think a very conservative would be 5 to 10% of your portfolio, maybe, as inside of your equity part of your portfolio. Equities would only be one part of your larger portfolio, be it bonds, be it real estate, hard assets. So, it would be a mix depending on your own personal. Now, a lot of times what I'll do is, as I see monies flow out of the U.S. dollar, like we saw during the last 6 months, I might look for more opportunities than less opportunities. But if the stock market, our U.S. stock market, is performing well, and I see the dollar is strengthening, right, that would allow me to stay in U.S. markets. But I'm always looking for those turning points in trends, or where I'm finding support and resistance in my trends, which might give me some opportunities when assets become cheap around the globe, or even assets become cheap here in the U.S. All right. Okay. Any other questions do we have? Gene, do you have any questions? How'd you like that traveling around the world?
Well, I liked it when you took us to Australia. I've never been there. So do you have any restaurant recommendations?
No, I don't. Australia is definitely one of the areas that I want to travel to. I really want to go to New Zealand. I think that looks like a really cool place of the world to try.
Sure does.
It's how beautiful how they have mountains and beaches like within 50 miles of each other. So that's
right.
where I want to travel to.
Yeah, so we have a new question coming in. What sector do you see as the strongest worldwide?
Well, let's go back. I think the Chinese sector was doing really well up into a few. Let's go back to our world sectors or overview. So I was watching this, and it did look like the Chinese one was doing well in terms of performance. And let's go and look at the Asian ones, Asia Pacific. No, it looks like South Korea has a greater alpha on a yearly basis. In recent months, China has actually decreased a little bit. Looks like some of the other Asia Pacific rims, Hong Kong, Singapore, Korea, looks like in the last month or 3 months is starting to trend well. So I would look at those opportunities. Now, what is our Barchart's opinion? Again,
I am always going to remember Barchart Opinion now as
the mother-in-law.
The mother-in-law. That's great.
Right? Your mother-in-law always has an opinion, doesn't she?
Opinion.
Right. So look at it here. We got Hong Kong, Singapore, and South Africa. So there would be an opportunity maybe in what is it, the Rand? I think is the South African is the Rand. Okay, cool. So we're getting a question: what is better, an index or an ETF for trading? And again, it's what you want and what you want to get out of it. An index might give you a broader. Think about, for instance, let's go back to our indexes, our world indexes, right? And indexes can be as diverse as well. For instance, in Japan, we have the Nikkei, which is 225 stocks, right? And this is a price-weighted index, right? So it weights those stocks that have a greater price. So like Sony and Toyota will have a greater weighting in this index. But this would be like our S&P contract, right? But they also have something called the Topics, right? The Tokyo Topics, which is of 2,000 shares of stocks, right? 2,000 different stocks. So that would give you a broader view of the Japanese market. So it just depends on how you want to invest. So that would be, if I had to equate it to something, that would be similar to our Russell, right? Our Russell 2000, right? So it depends. It depends on what your purpose is, or if you want to narrow down your focus into an ETF of a region that is, very asset class specific, or look at the constituents or the components inside of that ETF. So it's a good question, but I can't answer that for you. It depends on what you want to get out of that trade. Okay. Theodore asks, can you comment on foreign tax rates on ADRs purchased by Americans where profit is made? So your tax situation would be basically the same as it would be as if your capital gains would be in an ADR as you would have a regular stock. The bank takes care of the dividends and tax implications of owning that particular stock. You still have to pay the taxes and dividends that are distributed to you, or as you take short-term or long-term profits, income based on the agent, just like you do in any other stock, right? But you don't have to worry about paying foreign taxes or that's what the ADR does, right? Kind of a buffer for you, okay? So Douglas asks, are Barchart opinions based solely on past data or prices for futures factored in? Yeah, Douglas, all technical analysis is based on past price action. And so our Barchart opinion looks at those technical analysis, 13 indicators. So it's all based on past activity. But the common interpretation, or that all things being equal, and markets that are in motion or trends that are motions tend to stay in motion until they don't, right? So it is based on a past performance, I guess you would have to say. Okay, so we're at the top, close to the top of the hour. I do want to show to you guys, and I know Gene will want me to show you guys this, is that next week we're going to get a little bit deeper, and we're going to have a really cool session. We're going to look at unusual options activity, and this is, according to what I've been told, right, Gene? This is one of our more popular web pages, isn't that correct?
Absolutely, it sure is. Lots of great information on that unusual options activity page, and John is going to dissect all of it for you next week.
Cool. I'm really looking forward to that. I've been putting that together. I think you guys will really enjoy that, especially for my options traders in the room. We'll look at not only about how to read the unusual options page, this large volume versus open interest, but also we'll dig into, like, why would somebody buy a call that's $10 in the money, or why would somebody purchase, 15,000 options with 3 days to go, right? So we'll dig into those nuances of the unusual options activity, okay? All right, anything else, Gene, you want to bring up?
That's it. I hope everybody enjoyed today's session, and I sure did enjoy you taking us on a little tour of the world, John.
Around the world in less than 1 hour, right? Well, I want to wish everybody the best of health. Stay safe out there and the good of all trading.
Thanks again, everybody, and we hope to see you next week. Till then, bye.